All right, team. Good morning, everyone. Welcome aboard to the Morning Note. My name is Carlos Garcia. I'm the founder and CEO of Gar Capital. It is Wednesday. I know it kind of feels weird, feels like a Tuesday, but it really is Wednesday, September 4th, 2024. If you remember, Monday was Labor Day. So it is a short holiday week in terms of the market. Before you know it, it's Friday. But welcome to Wednesday. Let's go ahead and get started with futures. Futures are red this morning, but bouncing off the lows, at least that. Some optimism out there. Dow futures are down 45 points, NASDAQ down 97. Uh, Most of it, more than likely, or bulk of it, was NVIDIA's DOJ headlines. I missed that on the podcast because I recorded before the headlines even came out regarding some antitrust stuff. My note on that in terms of NVIDIA is that Google has had this, Meta has had this, and Microsoft has had this, Amazon has had this, and all four of those stocks have been fine. Those headlines hurt in the beginning, obviously, but that's lawyer stuff, and you really can't, you know, think of, I guess, judicial decisions based on investment decisions as well. Like you can't think of that as well. But, I mean, Nvidia itself, as we know, is very profitable. Duh, they just had their earnings. I thought it was a great quarter, other than the expenses. But if you're just going to be paralyzed based on judicial, and again, it's just a subpoena. It's not even any kind of charge. So yes, it's one of those markets at this moment. It's sell first, ask questions later, and that's fair. We are entering, guys, and I said this weekend, the 2 months of just tough. It's just two worst months of the year is September and October. Throw in an election season, and this is what you got for now. Does this mean the world is ending? I mean, at my count, the world has ended about, I don't know, like 48 times since 2020. That's just how it's been. Headlines come out, we get our news very quick. Obviously, everyone does. So I think it's more of just reaction at this point. Maybe some cash raising, maybe some seasonality, you name it. But really, what's the key is going to be Friday, guys. That's the jobs number. So all of this could be reversed. All of this could be even worse, reverse or worse. Just really depends on that job market. We need to see how many jobs have been added. Is there going to be layoffs? We have challenger layoffs tomorrow. We have JOLTS numbers today at 10. So not out of the woods yet. It's a lot of news happening this week. So, be vigilant at this point. NASDAQ is down 100 points, but we're right at 18,876. And again, I just want to show a quick chart on NASDAQ futures. And you could see that we are now below the 100-day. I know there's so many lines. Let me just remove this one. Let's get this out of here. Remove drawing and remove drawing. I know I have so many drawings, guys. My apologies. This upward trend line that has been broken, and we have been here before. The last time we have broken this level of support that I drew here was right on the 2nd of August. And then it took 1, 2, 3, 4, 5, 6, 7 days to recapture that. Now, again, could we fall even more and retest the previous breakout? Remember, we talked about that and we broke that as well. Yeah, absolutely. Really, your target is more than likely your 200-day moving average, which is right around 18,233. The only thing that really concerns me is when the VIX spikes so quickly, it tends to turn around almost immediately and pulls back. Volatility index is volatile. So again, we played QQQ puts yesterday. Yes, but we were safe and we closed it out, the runners, towards the tail end of the day, thinking that we might get a bounce. We have not got that overnight, but we'll see with the news exactly what happens. If we start breaking the lows, yeah, I mean, we're going to have to short again. That's fine. But again, we're just a wait and see approach. There's some statistics that I read this morning that really opened my eyes, and it was the NASDAQ. The NASDAQ, the odds of trajectory. Remember, we're always talking about odds. We're always talking about probabilities. So here's the price action of the NASDAQ, historically speaking, after falling 3% on a day, like following a 3% drop in a day. The next day being a loss between -3 and -1%, meaning back-to-back losses, 18.6% of the time that's happened, 52 times. Big loss, meaning more than another 3%. Reminder of like 2020 when COVID was really happening. We got 3%, just ugly hits. That happened 29 times, 10.39%. How about a big gain? Big gainer, more than 3% jump just the next day, 51 times, 18% of the time. How about this? A gain 1% to 3%. Just the following day after a 3% drop, 63% the majority of the time, there has been a gain the next day after a 3% drop of at least 1 to 3%. A small gain is 0 to 1%. That's 16.49% of the time. And small loss, negative 1% to 0, or like flat chop, 13.62%. So just looking at the patterns, just looking at precedent, just looking at the history, what is more likely to happen the next day after a 3% drop of the NASDAQ? And there it is, a gain of 1 to 3%, 22.5% chance that happens. Now, it doesn't mean that's guaranteed. Obviously, it's just about giving us perspective. So if we do bounce today about 1 to 2%, you are not surprised because history has told you so. S&P 500 futures 55.23. I'm watching the 5500 level. And the only reason ES is holding up is because healthcare and financials and consumer staples, they have held up, luckily, for the S&P. But we are below the 20 now. So we need to recapture that 20 and recapture that 50. We can get back above 55.50, 55.45. Then maybe that possibility of a 1 to 2% bounce post a 3% drop on NASDAQ is possible. Again, possible. Couple levels here on SPY. Let me get this going. All right, SPY. We have one gap to fill here at 545 or 544.99. So we are now at 550. Right there above the 50-day moving average, right above the 20-day. But yet the S&P 500 futures is below that. So we're going to see if SPY does break that level. Let's say 548.68. Yeah, we're going to have to short to this gap fill here at 545. And then you got another one, slight one at 535. And those are the only two in terms of gap fill that would fulfill this possible double top formation heading into September. And we're in September into October. Again, two very choppy, ugly months, and they tend to be ugly in terms of downside. But it's not as simple as just short and just we'll see you in October. Because October, the last two times we'd had ugly ones, 2022 and 2023, those mark the bottoms. Remember that. Russell 2000 futures, 2147 down a quarter point. This one is tough because we had the breakout right here above this wedge and it just flipped on us. What can you do in that regard? Take a look at the hourly pop, and now you just retraced this whole thing. So now you're back to the 38.2 fib. Let's see if it holds. Again, we do have a jobs number coming out on Friday. That's going to be a very big market mover. The NFP this week, think of it this way, as CPI the previous months, last year and the year before, how important that was. You remember that? CPI, inflation, so important. Now it's jobs, 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 always. Now, if the jobs market sinks and people are not getting hired or people are getting laid off, more rate cuts. Citibank made a call that 50 basis points is going to be cut in September. Deutsche Bank, same call, 50 basis points. I don't know what JPM and Goldman Sachs says yet, but I'm on the lookout to see what they have to say regarding the Fed cut because that's important to this whole deal. Liquidity. Recessions happen because there's poor liquidity. You can't borrow money, you can't spend money, you can't make money. But if there's access to money, recessions don't happen. Slowdowns happen, but not recessions. Recessions are, remember, contraction. But when you have liquidity and you have money to spend, you have money to borrow, access to money, there is not going to be a recession. Again, I know we're talking recession. Whoa, market, we have a GDP of 3%, but we're just talking about the fundamentals and the process of getting down there, if that were to be the case. Crude oil is down 0.36%, had a horrible day yesterday. Gasoline below $2 on the future side. So again, summer season's over, pretty much, kind of. Summer driving season after Labor Day, I guess. So expect gas prices to continue to go lower. OPEC was talking about cutting production, and this is kind of the balance beam now. You know, if OPEC cuts, the rich countries in OPEC can afford to cut their production. But the poorer ones that are really dependent on that revenue, they can't afford to cut. That's why they produce a little more above their quotas, quote unquote. Their idea is to price fix, keep things even so all their government budgets are paid because it's all based on oil, but it's still a market-based asset. So if gasoline and crude oil continue to fall based on demand slipping, that's going to be something to watch because if people are not driving, then I don't think everyone in the world has an EV. Yes, EV is a little more prevalent now, but that's going to give us a little bit of a hint on a possible consumer slowdown. That'll probably give us a little bit of more of an edge, a heads up, if ahead of retail sales if they come in a little light, because as we see, gasoline and crude oil is falling. Gold down 0.18%, pretty steady Eddie, even with yesterday. It was red, but it wasn't as bad as the S&P. Silver down 0.29%, or up 0.29%. Copper down 0.06. That's still above $4. Bitcoin down another 2.6%. We talked about how September and October are seasonally weak for Bitcoin. They are. I had a question yesterday from Masterclass regarding Coinbase. I forgot if I went over the chart, so I want to go over it just for him. We'll go to the daily. Yeah, you can see right here, if we get below 160.52, Coinbase is a short. Now, that doesn't mean that Bitcoin is worthless. No, it's just seasonality at this point. September and October, guys, just this way. It just gets ugly. Ethereum down 1.85. That's at 24.10. So there's Coinbase. Get below 160.62. I mean, you got a whole air pocket right here to around 120. I don't think it'll get that low. I mean, if it does, we'll play as it lays. But being below the 200-day is a big deal. That's not a good thing for Coinbase. And then I'm going to take a look at the VIX here. Boosting higher. Are we above the 23 level? Yep. That was the peak from October's 2022 VIX or 2023 VIX when we had the lows. And if we go to October's VIX, how high that went? That went around 34. So that's kind of, if you want to use kind of historical patterns there, we're slightly testing October's 2023 VIX peak. And that was the peak for VIX for the second half of the year. So if we do the kind of the same deal for 2022, we can kind of use that as our guide. So use 35 as a possible target if you do expect a lot more volatility, maybe more bad news or more fear out there. Fair enough. That would be your upside resistance. That would be the target. But for now, until we get above 23, I think at this point, this might be a short-term top on the VIX. Again, it does flip rather quickly. We were just at 65 just last month. Imagine that. All right, let's go ahead and get to the questions. So many questions. What levels are for Tesla? Good morning, everyone. Tesla, we had some news regarding some car registrations in Europe and in China. We still need to get above 220.86. That's your 50-day moving average. You're sitting right on the 20-day at this moment. But guess what? You're back in this channel now. So we need to get out of this channel, maybe get above 214 before we can even get interested in Tesla calls. If anything, guys, if you're getting below 203, it's time to put your bear hats on because Tesla has a lot more to go. And if we start getting, crude oil slow down, you get retail sales slow down, Tesla is a discretionary item. It's a car. You don't need an EV to live. It's not like Procter and Gamble or General Mills where you need cereal or anything like that, or you need deodorant. Tesla, you don't need to live with Tesla. You don't need to buy one. But the point I'm trying to make is that being discretionary, this is one of the first sectors to fall when there's any kind of fear out there, any kind of fear of consumer slowdown. Now, this all changes if we get a 50 basis point cut because Tesla's going to soar because now it's going to be cheaper to finance a Tesla. All right, flip a coin, guys. Thanks, Carlos. Very interesting. I'm hoping that my gain for IWM 222 is expiring Friday. Yeah, I have the IWM calls too, the 222s, and yesterday was absolutely terrible. It was just one big red ugly candle. But we've seen this in August as well. And then when everyone thinks the world's over, it just tends to bounce. And if we give ourselves a little bit of context, the S&P 500 is only 2.4% off all-time highs, or I think 1.9. It's not even, I mean, yes, we protrude everything, we expand everything, we make things bigger than they are every day since we trade pretty much every day. We talk about the markets every day, but this is such a small move compared to the larger view. Take a look at the SPX. I mean, we're not just at that point where things are awful. They're at the point of things are just September. That's how I see it. AMD calls. AMD is up this morning. Word is that BlackRock is taking a look at buying more AMD and Google. Fair enough. In terms of AMD, this is where it gets tricky. With AMD, you got to stay above 140.94, at least on the 1 hour. The problem I have is that this is a death cross, guys. You have the 50-day below the 200-day. So I expect more weakness on AMD. You can see this channel here. And again, it could just be temporary for September and October. This doesn't mean it's a bad company. Again, it's just seasonality at this point. AMD is up because of, I had the headline here. Give me a second. Let me go and read it to you guys. AMD. AMD BlackRock loads up on AMD and Alphabet shares. AMD hires former NVIDIA VP to lead global AI strategy. So a little bit of an add to their board. Looking at SLV swing, Carlos, what do you think? Seems like a good level of entry. Yeah, let's see SLV. All right. Can't say there's any good levels here to do anything on SLV at this moment, but you are seeing a flag. So if you want to get above 2750, that would be the trade on SLV. See, but you got to break higher. Here's your flagpole. Here's your flag. As long as you break out of that. But I have seen these flagpoles and these bull flags happen and they get sliced. So if you get below 24.19 or $24 in SLV, forget any bull flag. You're getting back down to 22 and possibly 20. Good morning, short Tesla and Nvidia. So Tesla, in terms of short, got to get it below 203.46. Nvidia is now below the 100-day. I'm in calls, unfortunately, at this point with that bad headline. Was expecting a bounce. We were at 111.93, now we're at 106.39. In terms of support, here is your support level if we were to short or you're looking for more downside. It's right around 97, and that's where we bounced. Really, you could see that trend line here. We bounced right on there, and 97.38 would probably be the next target if we start breaking the lows of around 105. NVIDIA, AMT, MU. Good dip. You talking about to buy? No. And I want to give a shout out to my investment club. I hope you guys are not too upset at me. I have been very, very cautious on what to do in terms of do anything right now. I want to get September and October. Really want to see if there's any opportunities for more downside. It hasn't been much to do in terms of investment club when you're hitting all-time highs this summer and spring. You know, you really don't want to add to all-time highs unless you're dollar cost averaging. But it's starting to get interesting where, you know, little Amazon Prime shopping out there, possibly. Nvidia at $100 starts getting very nice. But what if that breaks? What if this is just the beginning of something where, you know, you start getting some ugly corrections? That's what we have to see. The problem is the big elephant in the room, guys, is the election season. Election years tend to be this way. A lot of uncertainty, and the market gets very jittery. So that does give us opportunity. Guys, stocks are going to bounce, of course. We know this into next year as well. Yes, 6,000 S&P is going to happen. But as we focus on the prism of right now, in my opinion, it's not much to do. I really don't see where there might be demand for stocks at this point, especially in September and October. Doesn't mean the market doesn't bounce because it's algorithms, it's hedge funds. But I'm talking about the retail investor at this point. I think the retail investor should stay patient. You're still getting some return on cash at this point. We haven't had a rate cut yet confirmed. I think once you get that rate cut, I think that's when things get a little clearer because it's still just talk until it's done, whether it's 50 or 25, that we know we have a trajectory. I think right now, most people should be just in a holding pattern at this point. We're not at a point where things are cheap. And that can't be cheap when you're only 2% off all time highs. No, sorry, it's pretty boring out there. If you're a trader, you're loving it because it's volatility. But if you're an investor, none of this really matters. To be quite honest, it's not low enough for you to buy, and it's not high enough for you to want to sell either. Let's see. Nvidia we talked about, AMD I talked about. Let's see. Intel just bad headlines, continues to fall. Now with semiconductors, here's the scary part. You notice when it comes to certain sectors or businesses, when you have consolidation because some of them are not working, or you know they want to just expand, for example, that's usually the jump the shark moment. That's usually means a top in that sector. So what's concerning is that one of these big companies actually buy out Intel or they merge. If you guys remember from the early 2000s, AOL, Time Warner, these kind of really big conglomerates of mergers and acquisitions, they tend not to work. It just becomes too bloated, and then the market becomes very saturated. First, it becomes saturated. Think of the internet in the late 90s. How many websites, how many search engines? Now we have one main search engine, Google. I don't know if anyone uses Bing or Yahoo or whatever, But yes, over time, it just kind of collapses into itself and you just have one or two. Yes, there's many soda brands out there, but everyone knows Pepsi and Coca-Cola, right? Yes, Dr. Pepper's out there. The only thing I'm concerned with is that Intel, I'm not saying they will, if Intel sells the company or merges with another semiconductor company, that'll mean to me kind of a top. That'll be a top in semiconductors, and that would probably be um, could be one of those deals where you have a bubble. Yeah. This just an asset bubble in semiconductors where the money gets too ahead of the technology. We had this with the internet. We had this with mobile phones. It just happens. People get excited. I'm not saying we're going to get a bubble right now, but Intel is one to watch. If Intel is acquired by Nvidia, for example, that's scary. I don't want that to happen. I want Intel to bounce. I want Intel to figure it out. I want a hedge fund manager to get in there and start working on how they can get this company back on track because they're just getting hammered. And maybe there's a possibility in there. Can we play the VIX somehow? What's the option ticker for VIX? VXX. VXX is a good one, but there wasn't a lot of volume yesterday. Weird. At least on the put side, call side. Excuse me, the put side. And the spread was terrible, to be quite honest. SMCI, this one keeps taking a hit to the woodshed, or keeps taking a hit. 347.41. That is a whole round trip if you get there. I bought a couple SMCI shares. I got hit, and I'm still holding it because of the fact that, well, you don't need to really sell. It's not a trade. I can just hold on to it. Not a big deal. But if it gets to 347.41, yeah, that's probably a place where you're looking at. If you wanted to buy cheap, that would be the place to go. You do have massive gaps to the upside. That's a concern. If you want to short, you got one, you got two, you have three gaps to fill to the upside in terms of the stock, and you have one ugly one right here at 172.22. I think that once September and October is over, if Intel starts to move higher, if SMCI gets out of this bad news cycle in terms of the Hindenburg report, then SMCI should be okay. It's not like they're not profitable, obviously. This isn't the dot-com bubble where you have all these pets.com companies that didn't make money. SMCI makes money. Intel makes money. But at just this point, it's just not getting the demand for the stock, which is completely fair enough. What would you short today if you had to? SPY. That would be my first on the board. If SPY breaks down below 548.69, we are shorting to right here, 545 puts. And then you have one more gap at 535. But 545 puts would be the ones I would go. Do you think something bigger happened? GS down 20 doesn't happen every day. It happened in August where we just had this yen carry trade fall. And then what happens? It reverses over time. Yeah, right now it looks bad, but we've had this. And again, get used to it. September and October are just this way. The last two bottoms we had, 2023 and 2022, guys, happened in October. It's just kind of the way of the world at this moment. You have to ask, let's say if you ask the average investor, do you want to buy stocks ahead of an election, ahead of the Fed trying to cut rates? Probably not. They'd be like, I'll just be selling or I'm just waiting. I think that's kind of the sentiment of people. I don't think anyone woke up in September and said, yeah, I think, we're going to buy a bunch of stock at this moment in terms of hedge funds. I think they're just kind of waiting to see what happens with the election because that's implication on taxes and regulatory and the Wall Street and the stock market and the economy, of course. So, that's a whole different can of worms. We're not even there yet. We're 2 months out of the election. As we get closer, we'll see what the developments are. Bitcoin, again, another one where the seasonality just isn't that great. You do have a bull flag. Huh? What else is new? This upward trend has been broken. And really, in terms of downside action or downside support, it's 50,000. Really. And that would be a really great dip buy. Again, because you're getting into the point with the Fed cutting rates, that dollar is going to fall. And this is, to me, has been the culprit. Talked about this, that 200-week MA. I wanted us to break that. We did not get that. We are bouncing on the dollar index. If you have assets that are priced in dollars, this is what happens. That's bad news. So we need that dollar to keep going down. SOXX is semiconductor triple leveraged. Be very careful, obviously, on this one. I think on this point, you just nothing really in terms of a pattern. just downside and you're below the 200-day. That's not good. So if we do get the bounce in terms of the NASDAQ, like we talked about in terms of scenarios, this would be a good thing for SOX. But for right now, I don't think you should do triple leverage ETFs in this environment, especially in September and October. Whoa, you guys had a lot of questions. Thank you guys for watching. I haven't had this many questions in a while. I haven't gone this long in a while in terms of our video. Appreciate you guys as always. I'm going to go ahead and check in with the team. Let's make it a great Wednesday, and I will see you later for the podcast. Join me on Spotify, search Gar Capital. Have a great rest of your day, guys. Cheers.